Let's welcome in Erin Gibbs, Chief Investment Officer at Main Street Asset Management. Erin, welcome. Great to have you. Let's start with you and Gap. What would you do with the stock?
If you own it, get out of it. Definitely don't buy it. This is actually the second time the company has given us lower guidance just this year. And so this is something really concerning. It's also citing promotional levels, which means it's having to put stuff on sale, which is not something that other retailers really have been facing. And not only is the company giving us negative news, but Wall Street has been revising this company's profits down for the past 2 months. About 90% of all revisions have been negative. So it's just negative sentiment across the board. Even though the stock is down 20% today, I don't see it as a place to get in and buy it. When you're looking at constantly, revisions going down and profits going down, the stock price can keep going down. So apparel's a tough industry, but Gap seems to have some additional problems on top of it.
Yeah, and they're bringing in a new CEO to run that division as well, Erin. Let's go to number two, which might be a sprightlier idea, and that is Electronic Arts. What say you here?
Yeah, so this is a buy. I own this stock. I think EA Sports, it's a quality company, even though you might think of it as more of a growth, and it certainly has a lot of potential for its valuations to come down. It still is able to maintain very consistent growth and consistent operating margins. But the real reason you get in this stock is if it can lower that 30% commission, so that Apple's been most popular of the 30% fees, but it's really paid across the board. And because EA Sports has such a top product line, has such great content, they're in a great position to negotiate those lower commission rates. So with the pressure from regulatory as well as competitive, if EA can get that lowered fee, increase those operating margins, that's where we can get that valuation expansion and that higher price.
Interesting possibility there. And again, those shares are up on a broadly down day. What about D.R. Horton, Erin, the home builder? We hear about all the tailwinds for, generational demand for housing, but it's been a really tough year for this area.
Yeah. So even though from a very long-term trend, home builders might be great, I am not getting into this stock while the 10-year is rocketing. And you can see quite clearly if you look at home builders and particularly Horton against the 10-year yield, they're almost perfectly inversely correlated. So as long as we're seeing higher interest rates, it's just an industry I don't want to get into. It's not that it isn't a good company fundamentally, but there's just too much negative sentiment out there. And as long as the Fed keeps being as hawkish as it is, I don't want to be in this industry at all.
What is the market telling you, Erin? The Dow is off 800 points or thereabouts today, back briefly below 34,000 in the 33,000 area. What are you seeing?
It sells across the board. A lot of the other days where we had these big down days, it was tended to be more focused on the growth side and the high valuation stocks. Today, it's most evenly flat. So it's just a complete sell-off out of equities. Obviously, those rates are going higher, so selling out of your treasuries, a lot of cash coming on the side. So for me, it's really about this is, a fear trade. I think we're going to continue to see this through earnings season and up until the Federal Reserve meeting. And so we should expect these plummets. I'm really looking to see if the market just holds the support made back in March.
And I wonder, Erin, to some extent, if we needed to have this flush. I mean, that's the argument that Jonathan Krinsky at BTIG was making on Wednesday, where he said it's been, 350 some trading days since we've had a 90% down day. In an odd kind of way, will people be gratified if we do hit that level on the close here?
I think so. I think if we hit that support and if it can hold for that week, that'll be the sign for many investors, not all. There's a lot of fear out there, but that we are able to hold that support even with increased interest rates.
Yeah, and it's been an incredible streak. Erin, thanks for joining us. 3 stocks and more.